Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Wednesday, everybody. Good to see everyone. All right, so let's get started. We're going to take a look at the questions that you all have. So I'll just take them first come, first serve. Let's get to it. So first up is, all right, there we go. WR, good morning. XLP and XLV. You know, it's funny, I wrote both those down on my planner this morning, two symbols we talked quite a bit about. Both are double green, looking good on the pullback. So yesterday we had a number of healthcare stocks that really took it on the chin, and you can see that on XLV. Now, as the market sold off, we exceeded a particular daily volatility range. So if you're not in it right now, no harm in waiting for a good pause candle here. Other than that, you know, I am in this position, all my cards on the table. I do have our full complement of agro, moderate, conservative scaled into this. So yeah, I agree. I mean, not only do I agree, but I'm in terms of that pullback and the long position. But another thing to keep in mind is let's be aware that we could put in a minor low, so perhaps slightly lower lows, I mean slightly, or we might have a pause inside candle. As far as XLP goes, I mean, these are two markets that we'll be scanning here in about 18 minutes when we kick off our weekly Q&A for the Sector Secrets Mastery. So every Wednesday, we either have our monthly, once a month we have our monthly live session, which goes on for just over 2 hours. And then every week, just to kind of keep up with the watch list, scan the morning, and also discuss current open trades, we have our weekly Q&A. So we'll be kicking off that at 20 after. And those two symbols are absolutely on the list. Yeah, 100%. Those are on the radar for what it is that I want to focus on this week with the sell-off that we saw. I mean, for sure. So thanks for the question. Next up, newcomer. Great to have you. Your analysis makes good sense. Well, I'm happy. I'm happy to hear that. You know, we're always looking for like-minded traders to, you know, put in a group, look at the markets together, have that community, have that support. I really appreciate that. Thanks, Milky Fade. And thanks for being here for Charts and Coffee. Francisco, what are my thoughts on the RTY starting to look good? Well, I guess, you know, again, what is good for what, right? Not a buy or a short, right? Long or short, but rather good for what? A trend follow, a momentum buy, you know, what's the pattern? What's the setup? So I actually agree with you where it's starting to get structure. It's still a few notches away from good for me. So yeah, it's moving higher, right? Moving higher is a precursor to what could be better double green structure, but I don't think we're near the vicinity of good, maybe kind of heading in that direction. But good would be a little bit more along the line of further along would be, say, KRE versus the Russell, RTY, or IWM. I'm not there yet, my friend, but I don't disagree. I'm just not anywhere near there because there's so many other markets that have structure that I would prefer, which are those double green trends. So thanks for the question. XLE and USO. Love these two, but not where they sit, right? Again, John, thank you for the question. I absolutely love crude oil. We've been long crude oil for weeks, rolling in and out of the trend, meaning if we're buying dips, then letting the market follow through to the upside, buying dips again, and letting the market follow through to the upside. That's what I mean by rolling. And I'm rolling with that trend, rolling with this trend as well. But I guess the question to ask is, where do you notice a trend? Not just you, John, but everybody here in Charts and Coffee, including myself. Where do I notice that there's something to do? It is never going to be here, or as you can see, pre is 54.64. It's never going to be up in that area. And I do mean never, especially within the context of a trend, which we can confirm with the double green. it's going to be in here. In fact, not only was it in there, that's the setup we're looking for. Now, in the sector secrets, we've had a number of opportunities to roll with the trend. The most recent only hit an aggro level during our live trading discussion, but it's those pullbacks into the wave that I'm most interested in. And that's what we have. So this is the level for the entry, never this up here. So I agree, XLE looks good enough to have our attention. There's no setup for me up at these highs. And as far as crude oil goes, whether that's USO or QM or CL, same conversation. So John, keep them on the list. I mean, great idea to keep an eye on them. But as far as a setup, again, not even in the zip code. Because as a market makes higher highs, that's not where we engage it as in terms of the strategy that I like to use in the market. But excellent names to keep on the radar. Okay, next up is, let's move down here. Do I have any advice on position sizing in light of scaling in and scaling out? Cynthia, so we use a concept, two English words, no odd meaning to them: budget and affordability. That's the basis. After we understand the budget, then we know it's affordable. Once we have a budget, then we know what we're allowed to pay and how much of that we're allowed to risk. Once we have that, we know how to scale in. And that's the process that I use, not only in sector secrets, but also in simpler futures. That's the process I use to build positions. And, if there is sort of a holy grail to trading, I'm with you. It's an important question. And that's the way that's the way that we do our position sizing. And position sizing is absolutely related to risk, as you probably well know. And risk is absolutely related to an individual's account size. And if you follow that logic, you're definitely on the right path. And that's what I have done for my trading for decades. Utilize sort of this meter of where is risk of ruin and what is my per trade risk and a fixed position size, and just move forward from there. It's just simple arithmetic, or as I like to call it, market money math. All right, JMO, what are my thoughts on BP and a good entry point? Well, does BP have our attention? Sure. What's a good entry point? Well, we just left it just a session ago. So if BP, so here's just kind of related to the previous question. If BP is getting your attention here, well, then that's exactly what I train my traders to do. And there's nothing wrong with, for example, BP getting your attention up in here, right? That doesn't mean it's a right or wrong conversation. It's just the way that you're wired and the way that you're calibrated to the market, meaning this is an exhaustion trade. This is a momentum trade. So if a market pushing higher is what just grabs your attention, then your style, or at least the way that you're scanning for the market, is a momentum style. I am the opposite of that. Momentum is what we want to benefit from, not where we want to engage the market at. So I think if there's anything that we want to focus on, the idea would be first determining, am I a momentum trader or am I an exhaustion trader? And if you're an exhaustion trader, you're going to love retracements and dips and the corrections that allow us to engage the market within the context of very specific trends. And so that's the style that I deploy. The other style can benefit from a double green environment, but it's going to be calibrated to the market punching up through resistance, or the market making a new high, or the market surging higher. And then that's sort of what grabs your attention. So again, it's not a matter of right or wrong. It's just a matter of what do you find consistently grabs your attention. All right, next up is what I consider XOP or OIH at these levels. So once XLE is on the radar, David, then OIH will follow suit, as will XOP. So XOP is not a high concentration weighted ETF. OIH is. So OIH is, do I like the narrative around Schlumberger and Halliburton? And if I like the narrative around Schlumberger and Halliburton, then I've got an interest in OIH. If I've got a narrative and an interest in Chevron and in Exxon, then I have an interest in the XLE. And that's going to be your distinction. CVX and XOM, or SLB and HAL. Which one do you think has the clarity? And those are the two high concentration weighted stocks in the XLE and the OIH respectively. So thanks for the question. And I like them both, by the way. I like them both because the commodity that should sort of kick the door open for both these trades is actually moving higher. And that's crude oil. So as long as crude's moving higher, that's the foundation. That's the touchstone for the trade. There's a long position here too. And then the oil stocks, the related oil stocks, just sort of fall in line. That's the knock-on effect. So you're going to see that also in gold and in miners. Same idea. Next up is, just bear with me. So I like XLE. Yep, a lot of questions on XLE. I do like the resumption of the trend. I'm still bullish energy. That is correct. I am. Thanks for all the questions on energy. And that's really not just a technical trend, but a macroeconomic one as well. Let's see. Next question is dollar Canada and crude. Sure, Mark, we've got a pretty thorough approach right now to Canada. And that is across both sector secrets and the futures room, which is let's stay long the 6C, which is one of the best relative outperformers against the US dollar. That could be also the FXC ETF. Let's also look at EWC, that's Canada. And then, is it not only tethered to the crude oil narrative? Yes, it's tethered to the crude oil narrative, it's tethered to the lumber narrative, it's tethered to the macroeconomic reflation narrative. I mean, there's just so much to love about that Canadian dollar Canada play that I want to continue to focus on it. And again, buy double green on the dips. My biggest gripe about our EWC position is that I believe they are going to expire this month. So, I'm going to be especially vigilant about what the next pullback can be that we can buy and re-engage this. And this has been, I think at this point, I'm not going to guess. I know we're 2x on this trade. It's probably more at this point, but it's a very, it doesn't look like one of those sexy markets that's quiet and explodes higher. I'm not interested usually in markets like that. I'm interested in a market that has a high probability of just continuing to roll with the trend. And this has definitely been one of those markets. So really, really excited about that. Am I a fan into a run into earnings? Yes, I do like them. So what are my favorites? Well, I don't have a list for you right now, Al. And those are things we'll talk about in Sector Secrets, but let me give you the process. First of all, look, actually, you know what? Al, I got even better for you. Head on over to Countdown Trader and you can look at the past updates. And in the past updates, and you might have to go back a few pages, but I have a very, very thorough, here it is, right there. I have a very, very thorough discussion of 642 approach that I have used for decades. And that's the process that I used. Am I a fan of it? Yes. And right there, I spell out how I go about building the watch list. I haven't built it out quite yet, but yeah, we're on the cusp, clearly. Because I like to start that process about 6 weeks out. So the timing of your question is actually excellent. And what we want to do is focus on the criteria that's outlined in that article. So I think you'll love that at countdowntrader.com, the 642 earnings window. Do I have any thoughts on X? Look, of all the things, so Scott, not only do I have a thought on X, but we actually have positions around the idea of what's happening in steel. So, I guess what's always interesting to me, and I never really know why certain names end up on people's radar, right? And frankly, normally I know that the basics are a difference in process. So let me share with you my process. The only time X might have been interesting is right in here, which is a very specific setup that I look for that would be a precursor or a confirmation to a momentum breakout. But that has already happened. So there's no setup here now. But when I look at X, it should bring us all to SLX. When we look at SLX, the names that pop out would be things like STLD, MT, RIO, DALE, not IRO, DALE. So I like where X is in terms of the narrative. I don't like X. Of all the things that I could trade in terms of a process and a criteria that optimizes for relative outperformance, X just doesn't cut it, right? And I think the danger is, again, confusing. You might have a specific process as opposed to my process, but knowing the process is what is going to land certain names on your watch list. So that's what I'm always trying to give you guys an insight into. Why would VALE be on my watch list and not X? I mean, they both look pretty good, but when you look at structurally X, look how long it's spent chopping around. Not that it's not grinding higher, but really X is going to be better traded as a market that chops higher. And when it consolidates, that's going to be more of your setup as opposed to rolling with the trend, which is something we just did in Sector Secrets, which is pullbacks like that and then taking advantage of the move higher. Double green. So the basic difference between the two is the structure of the underlying market. So thank you for the question. So X is in the right place, just not a stock that I think is going to be as good a performer as some of the relative outperformers within that steel narrative. All right, so next up is the indicator at the bottom of the screen, is that what I use to refer to double green? Absolutely, yes, that is what I use to refer to double green. Any thoughts on TECK, a copper play? Well, I mean, I'd rather be in copper. The structure looks better, not by much, but I think the structure is marginally better in copper itself. And I think the structure is actually better in Freeport-McMoRan. So if you like tech and you feel that it's moving sympathetically with copper, and therefore a copper play where you have a stock proxy or a proxy via that symbol, which is your TECK is yeah, I can't say that it's not tracking with it. It's just tracking with it in a way that's a little bit more volatile than actually copper or Freeport-McMoRan is. So I won't say no, but I actually like copper itself better or Freeport-McMoRan. So yeah, I mean, I keep an eye on it, but just be aware that its characteristics on pullbacks are a little bit more volatile. And so just calibrate for that behavior, and I think you'll be fine. What are my thoughts on bonds? We've had our eye on bonds since March. And we had a 1, 2, 3 in bonds back in here. 1, 2, 3. And you can see the old pattern that I drew. And then we had a breakout. Well, what was really great about this breakout is what it meant for real yields and what it meant for gold. It kicked the door open for gold because what happened is the real yield narrative, which was heading higher, 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 leveled out. By leveling out, it allowed gold, which has an inverse or negative correlation to real yields, to finally break out. I've got zero interest in bonds as a general rule. Bonds have been a 1, 2, 3 that already fired and really did not prove itself to be a market that's ready for follow through yet. So bonds, not interested. I think it's a market that looks like it should be breaking out, and it might take its sweet time. It's been moving sideways since the middle of April. So when would the breakout be? I'm not going to hold my breath. However, if you engage a sideways market, and how do you know it's sideways? Well, there's your structure right there. Look at the lower row. If you have a sideways market, don't engage a market up here. That's just a bozo no-no, right? Where would you engage the market? At the bottom of the range. At the bottom of the range. So where it is right now is mildly interesting to buy calls and TLT. And that might be something we'll talk about here in Sector Secrets, because we've been going back and forth in this range for a while. So thank you as always for joining us for Charts and Coffee. I've got to jump on over to the Sector Secrets room for our weekly Q&A. Hope to see you all there. You can check out what we're doing over at simplertrading.com/sector. All right. Thanks as always. Be good to each other. I'll see you tomorrow.